Well, what are the Yanks smoking with the stock market up so damn well high and positive? Are dividend paying stocks dead in the water? And Rickard stops picking on APRA. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Paul, there's nothing better than waking up in the morning, going to my iPhone and seeing green on the screen with the Dow Jones. The American infection and death rates still aren't fantastic, but they're buying the stock market. What's going on?
They're buying the stock market. I think it's pretty much as Charlie Aitken's been pointing out on our Monday show, Peter, now for some weeks. The US fund managers have lots and lots of cash. If anything, they've never had more cash to invest. Everyone's waiting for the second leg down, and I guess that eventually forces people to act. I mean, I think the market's going to come back a bit, Peter, but as you say, lots of green over there in the US, and they sort of, it's like it's all sort of over, right? And I don't think it is, but let's see.
And it's the opening up of business that was the driver this morning, and like the Americans are miles behind us in terms of success on infection and death rates, but they're opening up. Is there, I guess, a danger of a second wave that could undermine this marijuana driven optimism?
Well, I guess there is, Peter, and they seem to be far less concerned. I mean, I think we seem to be more concerned about the second wave than the Americans. But look, some of the data there says that maybe the peak's still around the corner. So look, I don't know. Look, they're the glass half full people. We're the glass half empty people. Our media is still very negative, Peter. A lot of people are very concerned. There was an Essential poll out yesterday looking at how people are responding to it and what they think about and how concerned they are. Concerns are dropping, but there's still more than half the population is very concerned about this.
And I don't believe the Reserve Bank's view, which is, okay, it's crappy in June, 10% growth in negative territory, 10% unemployment, but going to 6% down by the end of the year and 6% up.
Yeah, they're the V-shaped recovery guys.
Love the Reserve Bank. They've always been right. Unfortunately, they haven't been. Let's go to the next important topic. Are dividend-paying stocks dead in the water?
Well, they're not dead, Peter. You're going to have to work a lot harder. And obviously, Westpac's decision on Monday, I thought was a little unfortunate because it ignores the fact that there are a lot of self-funded retirees who need
trusted and rely on
who need income from their bank dividends, and there was a way to share out the pain, pay a little dividend, and help it around. I mean, I can understand why the board did it.
Is it dead or deferred, Paul? This is the point I want to make.
Yeah, I mean, I think NAB at least has set a timetable. NAB has said, ANZ set a timetable. They'll come back to it in about the second week of August. They're required to do what's called the Pillar 3 disclosure. They have to put out a capital statement to the market. That's when we'll find out. Westpac says, oh, well, maybe in November. Who knows? I mean, I think Westpac should have set a timetable because it does cause issues about, people buying shares and will they ever get an interim dividend or not. So it's up to the board for Westpac to come back and set a date when they'll let us know or not. I guess it's probably dead.
But the important thing is this, Paul, if we do open up quicker than expected and we rebound faster than expected, it's going to be harder for the banks to argue, oh, we're going to be really ruined by this. It could be less ruined and therefore a little bit of a dividend could be possible.
Yeah, I mean, they just make a slightly bigger, higher final dividend. Who knows? Look, there are still stocks out there paying dividends. You're just going to have to work a lot harder. I just came across one yesterday, which is National Storage REIT, which is just done a capital raising. And of course, they're the people who own all the
storage centres where all the people live in apartments, got no room for their stuff. They throw it into a box.
Yeah, and they say, look, there's obviously going to be some COVID-19 impact. I mean, maybe a little bit discretionary spending, but they're not seeing it so far. Look, they still reconfirmed their guidance for a distribution, which gives it a yield of about 6 to 7%. So you just have to look out there. There are other stocks. Sure, the banks have come, but you just have to work harder. The resource stocks, I mean, BHP and Rio are still going gangbusters. Don't rely on them for dividends longer term, but dividend yields are going to come down more like to about a 3% average this year. That's what you have to get used to.
And it was averaging more like 5-ish, wasn't it?
It was more, yeah.
Plus
so
franking.
They're not dead. You just have to work harder and you have to be diversified because that's what the crisis has taught us.
I'm going to do dividends on Monday for the Switzer report. And finally, Paul, the issue is you've stopped picking on APRA. What's this? You always pick on APRA.
I'm always picking on ASIC. I want to actually just give APRA a bit of a bouquet, people.
A bouquet or a bouquet?
Well, I don't know. I'll leave it to you to judge.
I go bouquet. What do you guys go? I use bouquet, but go on bouquet.
You remind me of that program, was it?
What program?
The BBC one. I know. I just can't think of it. Amanda. Anyhow, I digress. Anyhow, look, APRA at least is publishing statistics about the performance of superannuation funds responding to these early payment requests.
Oh, yeah,
right?
okay, yep.
And they're putting out a weekly bulletin saying how long each fund is taking to actually process the requests. And hey, presto, the super funds are responding, so people are getting their money. Congratulations, APRA.
So ass kicking works for super funds.
A bit of ass kicking. Next week they'll actually name each of the funds to say exactly how many days it's taking. The first week of the data says it took 1.6 days, which is pretty good.
Pretty good.
That's once you get the request goes into the tax office, they approve it. Effectively, they approve it, pass it to the super fund. People are getting their money pretty quickly out of the super funds. And compared to some other experiences people have when trying to get redemptions out of managed funds and move across platforms, we know just how bad the industry can be, Peter, at paying money out.
Unbelievable.
This is a big improvement, and APRA getting its act together, putting the super funds under some pressure and putting them under the microscope and threatening to publish individual data, they're finally responding.
I tell you what, Paul,
it's good work.
The one plus out of the coronavirus is that I'm seeing the pluses of a police state. You know, when you kick people's ass who aren't doing it as they're told, bit of social distancing, young people in particular need a bit of ass kicking. On-the-spot fines. Everyone's got credit cards nowadays. Coppers can actually do on-the-spot fines.
Well, I don't think
it's time for on-the-spot fines.
I don't think we want to go down that path. One other thing I will say, Peter, I do think that you are. You're being sarcastic.
Sarcastic.
That's the word. Not joking. You're just sarcastic. And that's how you take away a truth and make it an untruth,
that's right.
Vice versa. You were being sarcastic.
Donald Trump did that.
Yeah, he's always sarcastic,
yeah,
right? As we know. But one thing I will say, the number of requests is actually a bit of a slap in the face to the super industry about the really poor job it has done in communicating the benefits of superannuation to the public. And I think that there's a bit of a wake-up call for the super industry. Yeah. I'm going to write more about that in tomorrow's Switzer Daily, Peter. But
tell you what, I look forward to that, Paul. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. And we've come back because I want to say one thing to you. If you are also mad about money, you could take our 21-day free trial of our stock market tipping newsletter called the Switzer Report, but only do it if you prefer to be rich rather than poor. SwitzerReport.com.au for those people who prefer to be rich rather than poor.